here is a descending wedge, and you'll see here, this right here is the breakout point. So all I waited for was a close on the 1 day above the resistance of this descending wedge. What is going on, guys? Welcome back to the Traveling Crypto. Interesting times. So Bitcoin is stabilizing above 6,600, which, you know, there was plenty of opportunity for it to break down within the last month, and it just hasn't, which is a good sign for stability. The overall market cap is still below 220 bill. Again, it keeps going back and forth like a seesaw, while the number of cryptocurrencies is actually increasing. I don't know if that's a good sign or a bad sign. I don't really pay attention to anything outside of the top 100, really, unless there is a good opportunity that I can't pass up, but it's few and far in between. But it definitely does dilute the market in terms of taking away from the possible value of other coins. It was just a few months ago that we were at 1,600, and now we are at over 2,000. I tend to think that it dilutes the market. However, it is also a sign that the market itself continues to grow and interest in the market continues to grow. Although adding coins, is not really that difficult. Creating a coin, an ERC20 token or something like that, and then, doing an ICO, we know that that's not a difficult thing. So the barrier to entry is really low. Anyway, I won't ramble about the number of cryptocurrencies much. Let us take a look at BTC. So we are nearing the point of decision here. This right here, this teal line on the 1 day chart, this is the resistance going all the way back to January, right? We are in this descending triangle, and we have really been, for the last month, been upholding a pretty stable sideways range. And I think we are, at the point where Bitcoin needs to come to a decision, because we're hitting this wall here. And not only that, but you are also obviously starting to get patterns within patterns. Here you'll see that you have a clear head and shoulders pattern forming. Right here's the left shoulder, head, right shoulder, although we didn't break below that, so you can't really call that a fulfilled pattern. And then you'll see coming up to the resistance line here, that we do have a bearish flag. Right here you'll see the pole, and here I'm going to draw it really sloppy for the sake of time, but here you'll see the bearish flag forming, and we tend to see a breakdown from that. Now the bear flag forming up against this 9-month or 10-month now long resistance, we'll see if that is strong enough to act as a factor that causes downward movement. And the other factor that we have to pay attention to is volume. Volume is actually, on Bitcoin, is actually really shit right now. Even if you look at something like the volume flow indicator, we're still under zero. And if you zoom out a bit on the VFI, you'll see here's the zero line, and we're still under zero, a far cry from where we were, obviously end of last year and beginning of this year. We haven't really been able to climb above zero the whole time. So volume continues to be a problem. We are currently under the 20-day moving average for volume, which is this orange line. Not a good sign when you're dealing with a 10-month long bearish pattern and a bearish pattern, a month-long bearish pattern within that descending triangle. So one thing that was interesting that I saw on the weekly chart is, this is the weekly chart for Bitcoin. I used Bitstamp because it has more data going all the way back to 2011. You'll see that if you put the Bollinger Bands on here, and it looks really ugly, but every time we get to a squeeze like we see here, you'll see a rally, and then the squeeze after the rally, here's another one, although not as tight as a squeeze as the one before, but you'll see a rally. And then obviously we see a squeeze happening here, you'll see a rally, and we are nearing the point of a squeeze. Now these squeezes can last a long time. So this one, for instance, lasted this was before we saw a rally, 6-7 months, maybe longer. So it's not necessary that, just because we're starting to squeeze that we'll see a rally. We could actually squeeze for a long time, for a few more months, before seeing a rally, if a rally is to come. But it is good to be able to identify repeated patterns in history, especially over a long period of time. And for crypto, 6-7 years is a long period of time. All right, moving on to alts. Here is why it is super important to play the breakouts. Playing the breakouts takes a lot of the guesswork out of trading. So there are a few trade alerts we sent out for alts playing the breakouts, and I don't mind sharing these because these were already happened. They're in the past. But if you want access to the trade alerts, link is in the description. So if you take a look at ZRX, for instance, this is ZRX on the 1-day chart. You'll see here that it is forming a descending wedge. And I was monitoring this closely, saying, you know, there is no reason to guess and jump in. Obviously, if you're a dollar cost averager, you can scale in. It is kind of dangerous to scale into something on the way down unless it is near an identifiable bottom, right? So if you started scaling in here, you know, you're right at around the 0.786 fib level. You would have put in a lot of money before you know, it actually found the bottom. So what I like to do is just be patient. You don't always need to be in a trade. Cash is also a position. I say that all the time. Excuse me. So here is a descending wedge, and you'll see here, this right here is the breakout point. So all I waited for was a close on the 1 day above the resistance of this descending wedge before entering a trade. And I was comfortable doing that because if we did retrace, we are near an identifiable bottom, right? We are near a swing low between here and between the swing low that we saw in March. So you can start scaling in, or you can just wait. If it does drop, you can just wait to see how far it drops before scaling back in. But breaking out of the pattern, you can safely enter in a trade. And then, you know, there are many different ways to go about this. Like there isn't just one strategy. You could set a very tight stop loss at, say, a -2% or -3% in case it does retrace, and then try again. Trading is a very long-term game. I know that, you know, crypto sometimes gives us the impression that it is a short-term game. It is a very long-term game. Even when you're making short-term profits, you want to be doing it over a long period of time. Anyway, so ZRX playing the breakouts on that. NAS, right? Nebulas. If you look here, we were in a pennant, a possible bullish pennant. Right here, you'll see the pole, and here's an almost perfect pennant. This is on the 4-hour chart. And, you know, I was just waiting to see, once it neared the apex of this pennant, will it break? Will it fail and break to the downside? Or will we get an upside break? And we closed on the 4-hour chart. This was October 7th. So a couple days ago, we closed on the 4-hour chart above the resistance, and you could safely enter in a position. Again, you can put a tight stop loss if you are, you know, just in the business of swing trading. If you are long-term holding, you can put a little bit of a wider stop loss and give your trade some room to breathe. But you enter in a position here, and on Nebulas, we are now up. What is this? If you take the close of this candle, 15%, around 15%, not too shabby. And again, also what you can do is, you know, once you are in the double-digit percentage profits, you can set a rolling stop limit so that you could take profits as the market retraces, right? So a lot of times you get this question from traders, oh, should I sell now? Should I sell now? Well, you don't have to manually sell when it's possibly too early, right? You can set a rolling stop limit and let the market decide for you. So for instance, if you rode NAS and you are at the top, at the peak here of this wick, and you're up 22%, you can afford to lose 2 or 3 percentage points on a rolling stop limit and let the market decide for you. Or if you want to potentially risk more to gain more, you can set it even wider. If you're afraid of long wicks, you could set it to 5% because you're already up double-digit percentage points. And I will never begrudge anybody for taking profits in a bear market. This is a bear market. The fact that you can find swing trades is an achievement on its own. Last one I'll talk about with regards to playing the breakouts on a trade alert is WaltonChain. You'll see here another descending wedge and a break above the resistance line on the descending wedge. This is on the 12-hour chart, a bit longer term. So this can indicate a point of entry, right? And also on something like WaltonChain, you'll see that we did have bullish divergence between the price, the RSI, and the MACD, which you want to find multiple points of confirmation. So I'm not only looking at the candle itself, I'm also looking at the fib levels, I'm looking at the divergence, I'm looking at the VFI, the momentum indicators. You're also looking at the moving averages. So there are a number of things that you look at, but the breakout in and of itself is a good sign to start monitoring the coin and looking at other indicators to find confluence of whether there is a decent entry point or not. Now, you don't always have to be swing trading, right? There are really decent buy and holds at the moment. If you look at something like GTO is, just from the previous swing high that we saw in May, there is 500% potential gains. I'm not saying you're going to make that. I'm just saying how far it has dropped. So there are a few coins that you can actually just buy because we are in a market crash, essentially, especially on some of these coins that you can buy and hold. QKC was one that we did that strategy with. I did not buy it, at the bottom here in August. I came in at the middle of this rally. Some of the traders in the Discord were able to capture, near the bottom here. I wasn't one of them. I got in somewhere around the middle, but it is a good potential buy and hold because even at this level, even though it has increased, in double-digit percentage points since August, it's actually been the most steady gainer. If you look at the slope here, QKC has been the most steady gainer out of any coin in the second half of this year. So what I was saying was, even if you measure where we're at now to the swing high, there's still, back to prices that we saw back in June, there's still 237% of potential gain. So there are a few good buy and hold opportunities in the market. You don't have to be a swing trader, but I just wanted to show you that it is on coins like NAS or WTC. These are great examples of how you can play breakouts. And again, if you want access to the trade alerts, link is in the description. Sign up. Last thing I'll say is if you need help with technical analysis training, if you're having trouble with your technical analysis and need one-on-one coaching, there is an option for that as well. I don't promote that as much because I only take a maximum of 10 clients a month. I do have a couple of openings. Link is in the description. Same link for the trade alerts. So if you're having trouble with technical analysis training or you want to take a look at your portfolio and maybe do some redistribution, whatever it is, one-on-one sessions, link is in the description. That is it for this video. Subscribe if you're not already subscribed. Hit that thumbs up button. Leave a comment if you have a comment or a question, or you can hit me up on the free Discord. That link is also in the description. Stay safe out there. Peace.